Hello guys, welcome back to another weekly Forex analysis. In today's episode, we want to look at two financial instruments. We want to look at GBP USD and gold. Now, as always, we are starting off with the GBP USD daily time frame. Now, if you have been following our last 3 episodes, we have been talking about this very currency pair. And we said that the last point where price broke structure and converted the structure from this bullish structure to bearish structure is this point. And I'm going to tell you why that happened. This is where we were converted, the structure was converted, and that is known as chalk. All right. Now, why is that? Now, take a look. Here is our high. We have been identifying this high in our last 3 episodes, that this is our high. And that high is confirmed when price took out inducement. Okay. And then we said this is our inducement in the market. Now, you can take this as your inducement. You can also take this as your inducement. All right. So we said this is, we said this is inducement in the market. This one. Okay. So this is our inducement in the market. And as you can see, inducement was taken out, confirming this high as a valid high. And then we said this low cannot be confirmed just yet until it takes out the major structure high, which has been created, all right, with a candle closure. And as you can see, that happened there. And this is known as a break of structure. Okay. So now that's a break of structure. After that break of structure, this low is confirmed as a valid low. And therefore, this becomes our valid low in the market, this one. All right. So that's our valid low. Now, after that valid low, what happened? Price travel back up. All right. After that very low, price travel back up and printed this high. Okay. For this high to be confirmed as a valid high, it has to take out inducement. And as you can see, inducement was taken out to confirm that high as a valid high. And where is that inducement that was taken out? Well, as you can see here, inducement was taken out here. Let me show that to you. Now, inducement was taken out here, all right, to confirm that high. And then we have this low. For this low to be confirmed as a valid low, inducement has to be taken, all right? And therefore, you can see that this inducement has been taken here, okay? This inducement has been taken there. And confirming this low as a valid low. Okay. So we can now have this as our valid low in the market. All right. So I want you to understand that. Now, after that low, I explained to you in our last episode how price now mitigated all these points here and moved up. All right. And I told you that this is your range high and this is your range low. And I told you that price is free to travel back all the way to the extreme OB, all right, to tap into that extreme OB before dropping. And I told you that the whole of this area is your trading range, okay, and that there are 2 OBs that work inside of your trading range. And I identified the first one as DOB, which is our decisional OB. And I said this was our decisional OB, okay, this is our decisional OB. And as you can see, this decisional OB is 1 OB, all right, after inducement has been taken, all right? And then the extreme OB is our high probability OB. Now, let me tell you, our decisional OB, this is our extreme OB here, guys, all right? That's our extreme OB, okay? So now, these are the only 2 OBs that will work on inside this your trading range. Now, your DOB is a 50-50 chance. It's a low probability POI, but your extreme OB is a high probability POI. I said so in our last episode, all right? And now, price has tapped into this decisional OB, as you can see, and reacted off of that OB, even though it wicked above it, all right? Now, some of you guys may be worried that is this POI still valid, seeing that it has wicked above it? Well, because it has not closed above this point of interest, this is still valid. Your POI here is still valid, all right? And now when price tapped on that POI, it reacted and started coming down. Now remember, I told you this is low probability. Why? It is because there is another OB that is unmitigated here, which is your extreme OB. And the extreme OB is always your high probability OB, all right? And now price is beginning to come back down. Now take a look at this. If price is coming back down, all right? Now remember that something happened here. This high, this our high here, all right, was swept by the high of this week. It was swept, if you look at it carefully. So as it was swept, now where is your OB here? Your OB is here, your demand zone, all right? Remember, this is your demand zone. And I'm going to tell you, I've explained to you why that is a demand zone. That's your demand zone, all right? Why is it your demand zone? Well, it is your demand zone because there is another OB that is at the extreme, which is high probability. Well, if price comes to this demand zone and gives us any reaction, then we'll be more than happy to take price higher to go to this extreme OB here, okay? Now, but if it gets here and now does not give us any confirmation to go long, if price wants to still continue to come down to take out this major structure low here, then we will watch. Maybe you will have something like this, guys. Maybe you will have something like this, price coming down here, all right? And then probably printing something like this, all right? Like this. Then it takes out this inducement, and then we can look to take trades lower to come and take out this major structure low here, all right? Otherwise, we are looking to take a long at that demand zone here, at this demand zone here, all right? I want you to understand that. So that is the picture on the daily time frame. Now let's quickly go to the 1 hour time frame and see what 1 hour time frame is doing. Now this is our 1 hour time frame. It's a 1 hour time frame. Now remember, this is our daily time frame decisional OB, and this is our extreme OB here. Now you can refine these OBs as you want it, all right? Now, first of all, let's look at this OB here. This is our demand zone on the daily time frame. Let's look at it, whether we can refine it on the 1 hour time frame, and then expect price to come and tap into it. Now, as you can see, this one is mitigated, this one is mitigated, all right? So where is the candle that is not mitigated? Now, take a look at this. This wick is not mitigated, all right? This very wick here is not mitigated, all right? This wick is not mitigated. Why is it so? Well, it is so because if you look at this, take a look at this candle, this bearish candle. This wick took out the low of this bearish candle, meaning that liquidity has been swept there. So this is a strong POI that we can look to take trades from, all right? Now, after this, look at the next POI that you have. Let's see. This is the POI we are expecting price to come and tap into, all right, and give us a reaction to go to the upside. Now, let's look at another POI. Well, this is inside bar, all right? But nevertheless, we can still, let's see. Nevertheless, this is an inside bar. This is not a proper pullback. But even though it is an inside bar, we still have this OB here, this one, because it took out this previous candle's low. But for me, this will be my OB. I do not like this type of OB, all right? Because the two candles are inside bar, protected by this bullish candle, all right? So this will be where I will refine my OB to. And then after that, you still have, after price took out this inducement here, remember, inducement must be taken. Now, after price took out inducement here, look at this inducement. Price took it out, all right? That's your inducement in the market. Because for any high or low to be confirmed, inducement has to be taken. So that's your inducement in the market. So this high is confirmed. This is your daily, this is your 1 hour time frame high, all right? It's taken out. So after that, where is your decisional OB? Well, decisional OB will be here. This will be your decisional OB, all right? And We want to see this decisional OB. And as you can see, price came into that decisional OB. All right. Now, when price came into that decisional OB, look at what has happened here. Remember, this is your decisional OB on the 1 hour time frame. All right. Now, when price came into it, price now reacted after printing this low. All right. Price wants to go higher. So we want to see price do something like this. If we find price, all right, going up and then giving us something like this, okay, we want to see something like this, comes back down, to tap on any inducement here, to any other block, and then we can go higher, all right, if it gives us that sort of thing. But if it doesn't give us that, and price now comes back down to take out, comes back down like this, all right, to take out this decisional OB here, all right, and gives us any something like this, all right, tap on this OB, and then we take price lower to this point of interest here. Anywhere inside here, we want to see price come here before going higher. Okay, that is the scenario on the 1H time frame. All right, remember our extreme OB is up there, so we want to take price higher. If it gives us any probability to go higher, any form of confirmation to go higher, then we'll go higher. But for the meantime, we are looking at this additional OB here and this 1 hour POI, which I refined into this one. All right, now that is on about GBP USD. Now let's get to gold quickly, and let me show you what gold means for us. Let's first of all go to the daily time frame of gold and see what is happening on the daily time frame of gold. Just like GBP USD, we have been talking about this instrument, all right, for quite a while now, and we said price. All right, let me clear this place. I don't want to go over it again. Here we said this is our extreme OB. All right, this is your high on the daily time frame. This is your low, and this is your high. Now this is your trading range, and price is free to travel to the extreme of the trading range. And as you can see, that happened here, and tap on this extreme OB and reacted off to go higher. All right, now when price went higher, take a look at what happened here. Price created this low and went out to take out this high. Now this becomes our inducement in the market on the daily time frame. That is, this is our inducement, all right, on the daily time frame. Okay, as you can see, inducement has been taken out, confirming this high as a valid internal structure high. All right, as you can see, this is our internal structure high. Please take note of that. All right, so we want to see price now come down to tap on our OB here. This is our extreme OB. All right, now another OB that we can be looking at is this order flow here. This is an order flow, guys. This is an order flow, this one. If you go to your lower time frame, you will realize that that is an order flow. Okay, so these are the two OBs we'll be looking at for price to come and tap into this one and gives us any reaction to go higher, then we'll go higher. But if it fails and comes to tap into this one, then we will go higher. But remember, this is your decisional OB. This serves as a decisional OB, and this serves as your extreme OB on the daily time frame. Now, let's quickly go to the 1 hour time frame and see what gold is doing. Now, this is your 1 hour time frame. So let's see what gold is doing there on the 1 hour time frame. Okay, so this is your 1 hour time frame. Let's make it a bit bigger for us to see what is going on. Okay, so this is your 1 hour time frame. All right, remember, I think this is the high. Is this the high of where? Anyway, this is your higher, your 1 hour time frame, and we have this high here. Why is this a high? Because it took out inducement, as you can see here. All right, inducement was taken here. Look at it. Here, inducement was taken. This is your valid inducement in the market. All right, so that's your 1 hour inducement taken out, and therefore this high is confirmed as a valid high. So we can mark this as a valid high in the market. And after that high, the low cannot be confirmed just yet until price takes out the major structure high, which is here. This major structure high has to be taken out, and a candle must close above it for your higher low to be confirmed. All right, so that is, as you can see, that is a break of structure. Price took it out with a candle closure, so we call it a break of structure. All right, now after that break of structure, your low can now be confirmed, and this is your low. Now remember, this is your low. This is your higher time frame, your D1 time frame inducement, but this is also your 1 hour inducement. So we can mark this as, this is your 1 hour low. All right, that's your 1 hour low. Why is it confirmed as your 1 hour low? It's confirmed because price has gone up to take out major structure high. All right, as you can see, and therefore we have a new high in place. This high, for this high to be confirmed, it has to take out inducement. All right, it has to take out inducement for the high to be confirmed. And as you can see, inducement has been taken out here. Where is it? Inducement is taken out here. Look at it. Let me show that to you quickly. Inducement has been taken out where? Well, here. Inducement has been taken out there. All right. So once inducement has been taken out, that high is confirmed as a valid high. Now, price now came down. All right. When price came down, take a look at what happened here. Price now wicked below. I think it wicked below. Let's see. Price wicked below. Now, you could have taken advantage of this OB here. This is an OB here, this one. You should have taken advantage of it when price wicked below that inducement. All right. You should have taken advantage of this candle here. This OB here to take price higher. And as you can see, price went higher. All right. Now, you would have taken advantage there. Okay. Now, but it wicked below it and price went higher. So when price came back down, all right. Now, price now came back down and went higher again. All right. It took out inducement again here. So it went up, and when it went up, it took out, look at it, it took out this inducement here. First of all, this is your low, and this is your inducement in the market. As you can see, it took out that inducement, and after that inducement, all right, this low is confirmed as a low. All right, now, but no, sorry, it took out that inducement and went to tap on this OB here. Look at it, it tapped on this very OB here. Price tapped on this OB here. You can mark the wick, you can mark the whole of the candle. All right. So it tapped on this OB. What's happening to my network? So it tapped on this OB and reacted off of it. Let me change. So it reacted off of it and came down. All right. When it came down, take a look at what happened here. Remember, this is your last significant low on the 1 hour time frame before this higher high. And so when price takes it out, it now takes it out with a candle closure that becomes your change of character on the 1 hour. But on the daily time frame, this is your inducement. All right, I want you to understand that. And now a low is printed. After that low, another low is printed, and it took out inducement. Where is your inducement in this case? This is your inducement here, guys. This is your inducement. All right, to confirm this low as a valid low. And as you can see, that inducement has been taken out, meaning that this your low now can be confirmed as a valid 1 hour low. All right, that's your valid 1 hour low. But remember that that is not your major low, it's not your daily low, but that's your 1 hour low now, because it took out inducement. And when it reacted off, when it went up, take a look, it tapped on this OB here. It tapped on this OB here. All right, and as you can see, price reacted off of that OB. Right then. So can you see that? So price reacted off of that OB and price dropped. Now, this is where we are now. Price drop. This is our lower high because it has taken out this structure low here, the 1 hour structure low. Look at it. It has taken it out with a candle closure. It took it out first with a candle wick. It wick, but eventually it closed below. So that is your BOS, all right? Your break of structure, all right? On the 1 hour time frame, that is. So confirming this high as a valid high, okay? And now price will now have to travel back up. This is the low. For this low to be confirmed, price has to take out inducement. So there are two things that can happen here. It's either price travel back up to take out this very inducement here, all right? Or price creates a new structure here in order to create inducement. Maybe price comes to take out this low, all right? And then this will now become your inducement in the market. And then you can now take your trade using any OB there to go lower, all right? Where are we going? Where are we taking price to, all right? So now we will be taking price to, let's see where we got our point of interest. So we'll be taking price to this point of interest, which is your decisional OB, or to this very extreme OB here. You can now refine these OBs, all right? I don't want to waste time in the refinement of these OBs, so you can refine them now, all right? And then that is the picture on the 1 hour time frame, guys. I don't want to waste time on this video. I hope you enjoyed the video. This is where we will draw the curtain on today's weekly Forex analysis. Please, if you have instruments, financial instruments you want us to look at, just drop them in the comment section, and I'm going to do justice to it in our next weekly Forex analysis.